For more on Disney and a possible investment case, we turn to Jessica Ehrlich, Bank of America Securities Senior U.S. Media and Entertainment Analyst, and Yahoo Finance's Alexander Canal. So, Jessica, let me ask you this. The stock is down now about 10% year to date. Do you think, Jessica, the risks, the challenges that Ali just laid out there, is it priced in at these levels?
Yeah, I do think a lot of it's priced in. Ali mentions a lot, but there's even more that she could have mentioned. There are a lot of challenges. They just came out of the battle with Charter, which lasted 11 days. I think the end results was actually a positive for Disney. Their film division has performed extremely poorly after, many years, more than a decade of incredible industry-leading performance. They also have, which may tie into some of the linear issues, ESPN searching for strategic partners. But I think that Ali got a lot of the issues that have been hounding Disney for the last 2 years.
So Jessica, given all of those...
Well, I'm sorry, go ahead. Go ahead, Ali.
No, I was going to say, Jessica, given all of those challenges, what one in particular do you think is dragging down the stock price so much?
Probably, I don't know. I mean, they also remember they have this, I don't want to say disagreement. They have the Hulu put coming up, so they have to pay at least $9.2 billion, maybe more, for Comcast 1/3 stake. I just think it's a combination. India has been problematic. But as you look forward, there are a lot of things that will change in the year ahead, 24 for them. So I don't know that it's one thing. It's just been one thing after another.
And Jessica, Bob Iger, grade his performance for me since his return. What letter would you give him? And it's only supposed to be, a couple of years, right, Jessica? So what are succession plans here as well?
It's because of the secular and cyclical challenges. It's a little hard to put a grade on Bob because the entire industry is suffering. I mean, there are some self-inflicted issues that may have been caused before Bob got there, whether the film division, it needs a lot of tender loving care, which I think is his priority at the moment. But you can't blame Bob for the ad recession that's going on across the industry, nor the decline in the linear pay TV universe. So some of this stuff is just, it is what it is. And I think there's a lot of confidence that Bob can do it. On the succession issue, I don't even think this is the right time to talk about that because there's so much to do to kind of get the company into the right place. They've restructured. They're bringing down costs. They're fixing what seems to be fixable. The focus now is on improving the content engine that it was and has been. But there's a lot of work to be done. They don't even have a CFO, a permanent CFO. So, Bob needs these extra 2 years. That's, I think, and Disney does too. There's no obvious candidate. But there, again, I would say there is some optimism as you look at for the year ahead. There are several things that will change for the better.
And Jessica, you mentioned one of those near-term priorities is finding those strategic partners for ESPN. Given the fact that we just saw ESPN's financials, who do you think could be best suited for that position? And I'm also curious to get your thoughts on that ESPN breakout, since we will receive some of those updated numbers in 2 weeks.
So ESPN's EBIT OI is, just under $3 billion. And it's a challenge. It's a challenge to grow that in the face of declining subscriber universe. So they will get price increases. Their agreement with Charter had that dispute where they were off the air for 11 days. Our understanding is that there's a healthy price or affiliate fee increase, and also that Disney Plus will be included probably early 2024. And that will give Disney Plus at least 5 million incremental subs in our. The strategic part is that I'll tell you the industry speculation has been that there will be investors coming in, including possibly some of the major sports leagues, maybe technology company, maybe distribution, but it's not clear what anybody gets from a minority stake. So we'll just have to see how that develops. But that is one of the I would say the challenges at the moment. Resolving Hulu and getting that is another issue. Maybe selling India, which has been a real drag in a very different market than anything else they operate in, will also be a priority.
And Jessica, let's talk about parks too, because Disney has said, listen, they're going to invest $60 billion in parks and cruises. Is that a smart strategy in your opinion?
Well, it's a slow ramp. So it's 60 billion, which is double what the last 10 years were. But you can see that there are investments that the money will ramp as the cruise ships, the new cruise ships come online, as the new attractions come online. But they've always said, for decades, they've always said that theme parks in general and these major attractions are their highest return on invested capital. So the demand for theme parks for them, for Comcast with and the Universal parks, it seems insatiable, maybe a little bit too extreme, but the demand is really incredibly strong on a global basis. And I think that we really should just at least mention that direct to consumer this year's peak losses, and the company has said over and over, they've reiterated that they expect to get to profitability before the end of fiscal 24. So in the coming year, the coming fiscal year, they're in a September fiscal year, there should be a really big swing in profits from DTC, which is a combination of cutting costs, increasing price, introducing the advertising tier, which will have a full year. So there are things that we can look for, and hopefully the ad market will improve as well.
So Jessica, narrowing in on that earnings report November 8th, what's the one thing you're looking for? What do you think will boost some optimism in this company?
We've already heard from a number of companies this week, so we know that it's not going to be a turn in the ad market. But what they say in terms of the profitability for DTC, how quickly they can actually cut costs, what they say in just kind of the outlook, the bookings for theme parks always is of interest. I think the film part of the business, the creativity, that's a slower build. I'd be really surprised if they have an ESPN strategic solution in 2 weeks. That could be a surprise.